All right, guys, good morning. Good morning. Welcome aboard to the Morning Notes. My name is Carlos Garcia, founder and CEO of Gar Capital. Glad to be with you this morning. It is Monday, October 2nd, 2023, on a Victory Monday for my Dallas Cowboys. You know, I had to represent. Great game yesterday. Hope everyone had a great weekend. We had some news over the weekend. If you watched the video yesterday, I posted the recap video for the week. We went over our options trades, previewed the week. So again, if you are interested in kind of getting a recap of last week, previewing this week, make sure to check out that video on our channel. We had the government shutdown averted. At least it was the time to set a budget was extended to mid-November. So at least that will be off the headline radar for now. But let's go ahead and get to futures. I typed up this headline on YouTube right around 8:45. So yes, futures are red now. I said futures are flat. So again, I just wanted to make sure that I don't want this headline to kind of be dishonest either. So yes, the stocks are down. Dow futures down 84 points, Nasdaq down 26, S&P down about 0.29%, Russell down about 0.23%. We did have the RTY long signal that hit break even for the stop. Some took some gains at around 1820, but again, we still have IWM calls open, and I went ahead and explained that for the premium members. If you are a basic member, or you're just someone in the market blog, for example, you're not going to get this on the watch list. So I went ahead and updated everyone on IWM. I explained the pop-up gap up that we had pre-market at the 6 a.m. open on Sunday due to the headlines of the government shutdown being averted. So again, nice and green overnight, and then we fell as a couple of things changed. Yields went up 4.645 on the 10-year. VIX is up 1846, and the dollar 106.59. We know how important the dollar is. I also put something on the blog for everybody as well this morning, letting everyone know again, stocks, futures, you can see, went ahead and posted this, pretty much at support across the board in terms of the indices, and the dollar is getting close to the recent highs. So something's got to give. That's pretty much what my point is. Let's keep going around the horn and we'll answer some questions here. Crude oil up 0.34%, 91.10, pulling back from those recent highs, I think around 96. Gasoline futures up 1.18%, $2.42. There was an interesting note from Goldman Sachs regarding the rotation trade out of energy and into technology, tech companies. We'll see if we get that rotation. In order for that to, I would say, actually happen, we have Wednesday OPEC meetings. So we'll see if maybe OPEC talks about any kind of change in terms of production. I think that's pretty much the only thing you can hope for if you're looking for a reprieve in oil prices. If not, then the trek continues to around 100. Obviously, we talked about that golden cross on energy, oil, XLE, and such. So the technicals are leading us to believe higher. But the question is, when? Timing. Is it going to be sustained? Such and such. The information that everyone needs as a trader, right? We know where things may be going, but we need to know when. That's the key. Gold futures down 0.73%, 1852. So interesting, you're getting stocks down a little bit, down quite a bit, about 0.30%. And you would think if it was a risk off mode, maybe a little more fear out there, gold would be a bit higher. But the dollar is really doing the damage, let's just say, to foreign currencies and to commodities, not oil. Oil being the only one that's not affected by this sharper dollar being higher. Imagine if the dollar was weaker. How high could crude oil go? Imagine that. Silver futures down 3%. Again, we just talked about commodities taking a little bit of a hit with the dollar being stronger, $3.66 and 7 cents, down 1.89% for copper. We're starting to get close to some support here on the S&P this morning. Euro dollar down about 45 pips, 105.27. Dollar yen continues to bid higher as we're getting close to the Bank of Japan intervention, possible intervention to the Forex. So even if you're not a Forex trader, maybe you're just someone who's an investor, it's important to understand what's happening in Japan and overseas. Keep in mind that the Japanese bond market is considered one of the safest. Their currency is considered one of the safest, quote unquote. just for the fact due to not just fluctuations, but more of the government, I guess, and their monetary policy, even though they're in enormous debt. Again, that's kind of the perspective of the world. Usually when we get some kind of risk off movement, recession, stock market crash, for example, dollar yen continues to fall. It would consider to be falling. It would be lower. But since the dollar is going higher, this is something we usually see in economic booms or higher stock prices. So it's interesting to know what exactly the Bank of Japan will do. They can buy more bonds, I guess, but I don't know what exactly their plan is if dollar yen gets above 150. And with that being said, that's why I don't want to trade that pair. Who knows what happens overnight in Japan where they change something and dollar yen tanks or dollar yen soars. It's too binary of a move. Again, we talked about that fork in the road scenario, left or right, which side are you going? It's better off not to do anything if that's the case. Keeping an eye on pound dollar, 121.47. That's down 54 pips. How about crypto? We talked about crypto, kind of being quiet now, starting on be on the move. 28,680, even with a stronger dollar. That's interesting. Coinbase is up this morning. You could see 5.2% after Singapore license win and Bitcoin's bounce. Is there any news on Bitcoin that I missed? I haven't seen anything. But again, starting to see a little bit of risk appetite into probably the most volatile of all assets out there, cryptocurrency. So that's good to see. You're not seeing complete washout liquidation type price action, at least on a macro sense. Let's go and answer some questions. Let's go and take a look at Morning Boss, BTC Pop, and Mara thoughts. Now, for me, Mara is my go-to stock when it comes to trading crypto in terms of the options market. Crypto, just hold it, just trade the derivatives, right? Just trade these stocks that have proxies toward Bitcoin. Have we broken anything even pre-market? No, not really. You need to get above the 200, which is at least $9.74. We are trading at 918, so we need a little more. And again, I love trading Mara. We've been trading Mara back down here, all the way up here. Members know what's up. So let's see if we can get that train back up higher and place some calls, but we need to start breaking some alerts to at least get us there. In terms of Bitcoin futures, I don't have Bitcoin spot here on TOS, but I have futures. You can see we're above the 61.8 fib. But we do have a gap to fill here at 35,249. Still need to get above 32, 31,000 for us to even get remotely interested in going long. The good news, guys, is that you're holding the 200-day. At least that, you're holding that. The problem is that the 50-day is continuing to fall. If this breaks below the red line, that's a death cross. That's where you're getting the 50 below the 200, and that is usually bearish. And we talked about the inverse, like in crude oil. When the 50 breaks above the 200, that's a golden cross. We broke above 95. We still need to retest those highs. If we do, we'll be targeting around the 100 level. But still above the 20. Got a nice, again, overbought pullback. Very natural, much needed. That RSI was very, very elevated. Just tough to catch that. You don't want to chase that. Even though it broke my alert for more upside, it was just way overbought. Let's see if we can get above 92.27 or so. Gives us an opportunity to keep an eye on crude oil for a possible long on the future side and see if we can maybe catch that momentum. The only issue is that OPEC has a meeting this week. Good morning. What is your price to buy more meta stocks for the long term? Interesting that you asked that question. I was actually thinking about that. Goldman Sachs placed out a note too saying that mega cap tech or mega cap stocks, the Magnificent Seven, Apple, Amazon, Google, those names, right? The names you know and love are the cheapest it's been in 6 years in terms, I guess, of earnings growth and PEG growth, price to earnings growth. So what do you do with that information? Should you go out and run out and buy? No, but I think we're getting closer to a point where it gets very interesting, where the fear is so palpable out there that that's when this is the time to buy. The saying goes, the time to buy, you won't want to. That's Walter Deemer, one of my favorite quotes ever. When it's time to buy, you will not want to. And that's when you know, not you have to, but you should, because sentiment would be so bad. Think about the times that we've had bottoms. Last October, man, how pessimistic was the world then, right? How about March 2020? Terrible. Everyone thought the world was going to end. It's kind of the same song and dance. You know, the financial crisis in 2009. Imagine if you bought real estate in 2009. Where would you be today? I mean, these challenges are usually just mirages of really opportunity. It's just the perspective. Some people see it as, oh my God, the world's gonna end. Some people say, oh my God, I got an opportunity to make some money, for example, or to take advantage of the situation and others' fear, right? We all know Warren Buffett's saying, be greedy when those are fearful and be fearful when those are greedy. We know that the CNN money, I guess, sentiment meter, fear, greed, is at the fear side. So we're starting to get there. My point in regards to Meta is that they are part of that Magnificent Seven. Do I think we can get a little bit of a cheaper price? I do. And the reason I do is because seasonality, which has been not kind of, but it has been pretty close to it of what we've been expecting all year. We're still expecting some weakness in October. The question is, what would cause that weakness? The assumption for me looking at the data would be a way stronger labor market, where the labor market is still too strong, where unemployment is still falling. And I would say that would make the Fed want to tighten the monetary policy continuously, another 25 basis points possibly in November. I think the market is pricing in a 36% chance of that happening based on Fed funds futures. So with that being said, I think we have just a bit more. I think around 280. If you can test 287 on Meta, that's fine. But don't focus on just like the pennies and exactly when you got to get in. Focus on the fact that you can always dollar cost average it. I just think we can get a better deal. How's this? Metaverse is an expensive, nice television. Very nice. Think of all the bells and whistles, has the Roku in it and all that. And you're telling me I want to buy that TV today. And I'm telling you, you can hold out just a little bit. We got Prime Day coming, for example, or we got Black Friday shopping, right? Prime Day being like the little pullback that we might get in October. Again, the expectation seasonally, if we get some kind of really big pullback, a correction, that would be considered Black Friday shopping at Best Buy. For example, if you're a stock investor. Or you could just make it easy and just dollar cost average over time and let the market do the work for you and you don't have to sweat it. I like Meta long term. We talked about their restructuring in terms of their labor force. They laid off a lot of people. They saved a lot of money. I mean, that was a very much hated stock, and Meta just continues to grow, and it's not in terms of just valuation, but at least into debt, they don't have any, which is nice. I know that took a while to answer. Good price to pick up some Broadcom shares long term. I don't have any Broadcom shares, and the reason I say so because I don't want to be too loaded on semiconductors. I still think Nvidia and AMD are still the top dogs, from my opinion. Let's go to the weekly chart on it. If we can get above the 20-day, again, it's the same deal. Semiconductors are kind of conducive of the market, especially versus the S&P. They're a little more high beta, meaning if the S&P falls a bit, semiconductors are going to fall more. Again, these stocks are commoditized now, unfortunately. So Broadcom could be an amazing company with a great balance sheet. But if semiconductors get weak, meaning the other names in that sector get weak, or the S&P gets weaker because of Fed policy or any kind of macro situation, Broadcom is going to pull back with it. It's not going to be as insulated as maybe you would want. You're sitting on the 100-day on the daily. Issue here, you have a gap to fill at 733. How's this on Broadcom? Would you think that, could you hold out for another $100 discount on Broadcom? I don't know how much that would be, a 7% pullback? Not too terrible. It is a breakout on the daily, but I think if you can wait a little bit, if you don't want a dollar cost average, to 733 is a good spot to do it. TNX breaking out, crypto, yep. What's your thought on placing on cybersecurity in your portfolio long term? Again, you could do ETFs on there. You could do, was it Cloudflare or CrowdStrike? There's different ones out there. I don't know much about cybersecurity. Usually when it comes to a sector that I would be interested in, for example, let's say I'm interested in genetic engineering. Do I just go ahead and research every single company or the one with the largest market share in that division or that subsector? Or what I can do, again, I'd have to pay commissions or pay a little bit of advisor fees, get an ETF, an exchange traded fund that has those names. So you're betting or you're investing in the idea, the sector, the actual business itself, instead of just having that single stock risk of one company. So again, in that regard, I would go cybersecurity ETFs, for example. Start kind of snooping around. I'm not against it. I would always assume that the next kind of big conflict would always be an online one. I grew up on War Games as a kid. It's a movie from the 80s, way back when. I just dated myself, but Yeah, I mean, cybersecurity. I mean, we live in a very dangerous world when it comes to like viruses and stuff like that. We read about the Caesars casino in Vegas that got hit with a cyber attack. You know, how important are these cyber attacks for these companies to protect their assets and protect their machines or protect their books? You know, I'm pretty sure Caesars Palace and all these other casinos now are going to double, triple down on security to make sure that, you know, they're not hit again. So I love the idea of cybersecurity. Don't get me wrong. That is a subsector. Instead of just picking one, I think the ETF is the way to go because at least you're diversified with the idea of the company or the idea of the service that you're looking to invest in. VIX possibly to 22. I have an alert here at 1999. That's where my alert is. That was the support from last August for the VIX, as you can see. So we are above the 200-day. 20 is still looking like it's possible. Those are the highs from May. That's the high from double top in May. The spike in March was at 30. I don't know if we get there. Well, at least this week anyways. So the question is, as we're on the weekly, we're sitting right on the 50. Again, technical analysis on the volatility index seems kind of rather redundant in a sense. I'm like, I mean, you're better off just doing price action on the S&P because sometimes the VIX can be red and stocks can be red. It happens. So again, this would be more of a guide than anything else. Look for 20 as possible resistance. That's kind of that psychologically satisfying number for everybody. And VIX, in a sense, is really a survey at the end of the day. So you kind of have to use the human thought element there, you know, the human emotion element, because the VIX is an emotional type indicator to me, kind of like the University of Michigan consumer sentiment survey. It's the same kind of thing, in my opinion. Levels to add Amazon for the long term. Let's see it. And Amazon did pull back very, very nicely. I have the green line here right at 120. Let's see if we can draw some fibs. Let me see if I have it here. So here's the weekly chart. We'll make life easy. Let's see if I can add us drawings. We'll go from the lows, 1843. And we'll go to the top here at 188.65. There we go. So my green line is pretty darn close to that 61.8. That green line right here, that's where we fell, and that's where we finally got that breakout. Are we looking at a double top at possibly 150? Possibly. I doubt it. We still have the gap to fill up here at 163. 120. I would think 120, if you can hold that. We tested it pretty closely at 122.84, but 120 seems about right. The weekly 50 is right here at 111. So again, if we get that October weakness, possibly, but I think 120 is pretty good for that name, Amazon. And the only issue with Amazon, again, the headwind, is the fact that they're very tied to the consumer. They're consumer cyclicals. Would you consider them not a staple? I would say discretionary. I guess everyone is different. They have groceries too. But if we get the consumer slowing down, if something happens in terms of layoffs, unemployment spikes, and you're talking about student loan repayment, that might affect Amazon. So again, we do have earnings reports coming out on the 13th of October, the new kickoff of earnings season. I believe Amazon reports in October. That gives us ahead of time of their forecast for the holidays. They tend to do pretty good in Q4. Maybe we get a crack at 120 on Amazon. But again, we need to see exactly what is this October slam. If we get one, what's going to cause it? Is it going to be yields? Is it going to be some macro issue? We have to wait and see. Right now, all we are, guys, right now is where we were when we closed on IWM pretty much on Friday. What about Tesla? Big drop from the weaker delivery report. Oh, did that come out already? Let's see it. Yep, we got a drop here. As I was talking, we got the report. Let's see if I can get it for you guys. Okay, I do not have the number out yet, but I do see a drop on Tesla. It gives us a chance to chart this thing. Let's see. Okay, just came in. I don't have the numbers. Let me see if I can get it. Actually, the details. Here we go. So I'm going to post it right now on the blog. There we go. Yeah. It's in the chat, right? Yep. I got it here. Third quarter SX deliveries, 15,985. That's a miss. And the 3 and the Y production is below estimates as well. Let me see if I can get the details. Note sequential decrease in volumes caused by planned downtimes for factory upgrades. Well, that salvages some sort of reason for that decline. Let's see what the market says. So there you go. There's the details on it. 435. Thank you for giving me that info right here. Evanir, I'm going to ruin that name. Hopefully not. So let's go and take a look at Tesla. Well, here's the deal when it comes to automobiles. Automobiles, obviously, we know are discretionary, meaning you don't need a car to necessarily live, right? But it's important. So again, it is discretionary. It's not like a staple like food and shelter. So looking at Tesla, we're at 242.52. You're right at the 100-day, sitting right there. Now the question is, do we hold it? And again, if we don't, let's see if we can get below 238.27. I would say this wick here, 234.66, gives us a little breathing room just in case we got a little more downside. And if we do, we got a gap to fill here at 217.66. Probable, what I see more likely is that we bounce off that 100-day. Now, I still want to get above this 50-day moving average around 251.27. We rejected that last week. I did not want to trade Tesla ahead of that delivery number. There's no point in just having that risk there, especially when you don't know what's going to happen. Now you're just handcuffed if you have calls and you're hoping that you bounce off that 50-day of 242.33, and yet here we are bouncing. But you got to get above 251 or so, that 50-day to go long, and my target is 262. It was part of the watch list, but that's what I'm expecting anyways. Morning, boss. Do you see NVIDIA going down to 300 in that gap? Probably the biggest gap out there in terms of the one that everyone's seen. This one right here. This is the earnings gap from May, if everyone remembers, when basically NVIDIA saved the summer. Let's just call it that for what it is. Do I see that happening? We need a major catalyst event to get there. I can't predict bad news because I don't know what bad news would it take. Man, I mean, you would need some real bad news. We do have earnings coming up for semiconductors, but NVIDIA reports, they just reported on August 21st. So they're not going to report maybe till November, if that. So the question is here, what's it going to take for this stock to go down? Again, you need a macro issue. You need some kind of meltdown, some kind of global issue for NVIDIA to come down, because earnings are not, we just had them in August 21st. So, a couple more weeks, I would say 6 more weeks, NVIDIA will come out. Then they'll have their guidance again. But I mean, NVIDIA's done pretty well. The problem is just you wait forever and then you're never going to get a shot at it. So, I mean, I can't say it's impossible, but it's pretty unlikely, at least by the end of the year, that NVIDIA's gap fill fills, unfortunately. It's been holding. But again, technically speaking, could we break down below 3405 and get us $100? I mean, I'm trying to rack my brain and think, what would it take for that to happen? You would need, I guess, an investment bank to give a big, ugly sell rating on the company, on NVIDIA, or they need to slash guidance or something along those lines, because we've been having board of directors and insiders of NVIDIA selling shares, and still the stock continues to hold that 100-day moving average. So go figure. We'll see what we get. A lot of great stuff today on the morning note, guys. Thanks again for your questions. Thanks for the information. I'm glad that we got that Tesla number out for you guys. So we'll see what we get this morning. Staying patient as always. We got a new month, new quarter, new week. Always exciting. Let's make the most of it. Have a great rest of your morning, and I will see you guys tomorrow for the next morning note. Actually, really quick, I may have to, actually just remembered, I might have jury duty tomorrow. I know. So maybe no morning note. I will let you guys know on the blog. Any issues, I'll let you guys know on that. But I'm an alternate, so I'll know by 5 p.m. today if I have to go to jury duty tomorrow. It's just what it is. Have a great rest of your morning, guys. Cheers.